Hey guys, welcome back. We're now about to dive into December 2023 market reports for all of our trackable markets here around the Indianapolis area. I know you already know this. My name is Chris Knight, Business Development Manager with Red Door Property Management, and I have the pleasure of being joined with Mike Taylor, owner of Red Door Property Management. Mike, how you doing?
Pretty good, Chris. Hey, we did not plan this, but it is fitting that we are wearing Christmas colors. I have a green sweater on, and you have a red sweater on. So totally unplanned, but it works well.
It's orange. It's orange, everyone.
Oh, okay.
It totally looks red. Merry Christmas, happy holidays. I hope everyone had an awesome holiday and is off to an amazing start in the new year. And I'm sure, everyone's motivated here at the first of the new year, right? So I know we're going to get tons of viewers. Everyone's tuned in. What do I need to do? Where do I need to invest? Look, the stock market is being predicted to have a rough 2024.
Yep.
I need to put my money in real estate, and we're going to give you the insights into the markets to help you do that. So stay tuned in, like and subscribe. This is where you need to be to find out what's going on in the Indianapolis market. So here we go. Let's do this.
Let's do it. Let's jump into Indianapolis itself. So if you guys remember, been watching this in the past, we kind of have a new format where we're going to go through all of our market reports all in one video here. And so we'll start off with Indianapolis itself. We do have a little bit of a new format. We got a couple little bit of a deep dive graphs. We'll show you after this one to take a little bit of a historical look at active homes and average days on the market to make it a little bit more sense. So constantly tweaking and improving and just trying to make this a better for you guys. So we just jump into kind of the main graph here, median price over time. So, we're doing this in January. This is honestly a bit of a year in review, right, for Indianapolis. And so kind of a flat year, to be honest, in terms of growth for average rent. Did see a bit of a bump here, peaked out in September, and then seeing some seasonality, very, very typical, where prices do tend to trend downwards in the winter months. So November and December, almost always, not always, but you'll see a couple different cities bucking the trend here, but almost always we'll see a decrease in December, and that's what we're seeing here. And then we do get a little bit of a sneak peek here in January, where we're going to start off just a little bit lower than last year. So if you guys have been following this or following the Indianapolis market for a while, you know that Indianapolis, just almost like everyone else, had a huge boom in 2022, right? So, and then had a bit of a correction here in 2023. So that's kind of what we saw, but it's fairly stable. So nothing really too dramatic here. It's a pretty stable market.
Yeah, sorry, Mike. If you're a kid, you're excited to see this. You're about to go sledding on that hill all day long. Although as an investor, you're not excited to see that, but you're also not surprised. Just like you said, seasonality.
It's seasonality, and it's nothing super dramatic. So I'm not super concerned about it. Active homes, 2164. I'll show you what that means, because we were doing these before. It didn't have a lot of context. So we've added this kind of historical over time. So there is a decent amount of homes on the market. That's 2164. Again, going back to the average rental price for December, closing out the year here, 1325 is where we are in the Indianapolis market. So that's very, very affordable from a renter's point of view, and super attractive. So that does represent a little bit of a decrease from last year. Again, we're seeing a little bit of a correction from those heights that we saw in 2022. And as I mentioned, going into the end of the year, a decrease from last month. I'm going to attribute that to seasonality. Average days on the market, if you've been following this, it has been a wild ride for Indianapolis days on the market this year. It has been all over the board. So 66 is a little higher than we would like to see. I don't know if there is a typical anymore, but typically we would see that probably between 30 and 45 for the winter months. So we are a little bit higher than I would like to see. But I'll kind of maybe dive into that a little bit more as we look at the historical the days on the market over the course of the year. Jumping over here to average sales price. Again, we look at this from an investor point of view. So we look at homes under $500,000 in the Indianapolis market. And I know I always harp on this every single month, but gosh, that's just so affordable. $225 046 is the average sales price. That is so affordable, and probably one of the reasons, probably a major contributing factor to Indianapolis was just named, what was it, Chris, number 4 hottest market for 2024? Is that what it is?
Absolutely. If we're going to say anything during the Indianapolis market report, it's to point out. Let me just pull up real quickly so I don't mismention anything here. Indianapolis expected to have the number 4 hottest real estate market in the country this year, according to online real estate listing site Zillow. That's awesome. I don't want to spoil too much here. I am going to shoot a separate video just doing a slightly deeper dive into that, but kind of just glossing over why Zillow might be in tune with the Indianapolis market. But what investor doesn't want to hear that right now? I mean, Zillow knows what's going on, right? I trust the information. Number 4 hottest market, Zillow, I agree.
We won't ruin it, but it's affordable. Indy's got great fundamentals. It's a great place to live. Rent is still affordable. When you start looking at other parts of the country, gosh, $225 and $1325, those are such approachable numbers. It's no wonder that we're not number 1, to be honest with you. But I'll let you get into that with your video, Chris, on the next one.
No spoiler alerts here.
Yeah. All right, number of homes sold at that price point, almost 800 homes. So it's not like, we're cherry picking these. There's just a couple of these available. There's tons of homes available in this very, very affordable price point. So it's there's lots to choose from.
Yeah, this is awesome. Honestly, and I don't feel like I've had the same feeling about the Indianapolis market that I do now, right? I mean, Indianapolis is, everyone knows, or if you've been an active investor for any time, you probably know that Indianapolis is a pretty good market to be a part of. We're not only on Zillow's number 4 hottest list, we've been on other lists before, but it surprises me. It makes me feel like this is more of a stable market. This is stabilizing, and I mention that only because previous months I haven't felt like there's been any stabilization. It's kind of been all over the place, like you mentioned about the average days on market, which we're seeing trending up, which doesn't surprise me. Seasonality, you're going to see that trend up a little bit. Average sales price down just slightly. It's only down, if I'm looking at last month, it's only down $2,000 over the November 2023 market report. Doesn't surprise me. Interest rates are going up. That alone, seasonality alone, I think speaks to that much. But let alone the interest rates kind of creating a little bit of fear in the market and slowing down, which we're also beginning to see change here a little bit with market interest rates trending down here.
Yeah, and I think historically, we have seen a little bit of a volatile marketplace this year with days on the market, with average rents, but historically, Indianapolis Indianapolis Metro has been just a very stable market, a very safe market. We're not California, we're not Phoenix, we're not Austin, so you're not going to see these huge increases in rent, huge increases in sales price, but you're also not going to see these huge decreases. Those guys go super high and then they go super low. Indianapolis is just steady, true, fairly predictable. So if you're looking for a safe investment, I think Indianapolis is a great place to look.
Absolutely, couldn't agree more.
Well, let's take a look at these new graphs that we've added to add a little bit more historical kind of a framework for a couple of these things that we look at. So we look at active homes on the market. Well, what does that really mean? 2165. Compared to what, right? So you can see the trend is just slightly more inventory over the course of the year. So the low point was 1677. We were actually at the high point this year of 2165. So it is trending up, not at an alarming rate, but this just gives you a little bit of a historical viewpoint of where we are with our inventory. So it's creeping up, but actually I think the renter pool is also creeping up with interest rates. I can't tell you how many articles I've read about how it's the worst time to buy a house versus rent a house. And so I think the available number of renters is also increasing with this supply as well. So yes, we're seeing an increase in supply, but also increase in number of renters.
Yes, again, you talk about reading articles. I can't tell you how many articles I've read about new commercial industry coming to the Indianapolis area, just population growth in the Indianapolis area, which might be another thing that we might want to track as we start doing more and more of these market reports, right? That's going to directly correlate to, or how does that correlate to your active homes, your median rents over time, things of that nature. But yes, commercial industries coming in the Indianapolis area and surrounding markets. I don't think there's any concern with the increase we're seeing here on active homes on the market, without a doubt. And just looking back, because I would hope that active homes on the market in some way correlates with your average rents. I mean, we are seeing rents decrease month over month, but only very slightly. So it's very stable, can speak to seasonality. I don't think there's any indication here that active homes on the market is any direct reflection on the rents in the area. So it tells me that supply is keeping right up with demand.
Yep, totally agree. All right, let's jump to days on the market. If you've been following this at all, you know that days on the market has been just a total wild, unpredictable ride for Indianapolis this year. We ended the year at 66, which is actually not bad, all things considered. For some reason, we had this crazy peak in June of 124. That was super alarming. And thankfully it got there, and then it kind of slowly worked its way back down. So again, in my mind, an average for the winter is, between 30 and 45. Average for the spring and the summers, probably somewhere between 2 to 3 weeks would be more of an average there. So I think we had a little bit of, just speculating here, but I think in 2023 we had a little bit of exuberance from our investor community. They saw the returns and the increases that they got in 2022, and I think some investors got a little excited and thought they could do that again in 2023 with their asking prices. And I think that's some of the reason that we're seeing or saw this increase days on the market in 2023. So I think there's a little bit of a reset happening, but again, that's just a little bit of speculation. Any thoughts for you, Chris, on days on the market?
No, exactly. That's exactly where I would land. And if you tune into these market reports, some of this is going to be some of the same things that you've heard, right? As the markets do fluctuate a little bit, and that's exactly what we've indicated previously. Now, directly relating those comments to the days on the market, I would expect May and June to probably have, because that's how I felt when in the actual market with the boots on the ground. I felt like there were a lot of investors over April, May, June, July wanting to achieve the rates that they were hearing about. Throw any rental amount you can on the board and you're going to place a tenant. Well, and then you had to bring the investor or homeowners expectations back down to reality, right? So you're bringing those back down to reality, and that's exactly what you're seeing in that transition from June, July into August. So that's, I'm right along with you, Mike. That's what I think is happening here. If I'm going to encompass all that into one term, it's going to be a correction in the market.
Yeah, I can tell you, and I know, Chris, you probably had more of these conversations than I did, but we, in those May, June, and July timeframes, we were having some difficult conversations and educating our homeowners of, hey, here's what's happening in the market. You need to really think about your price and adjust your price accordingly. Right. We were having a lot of those difficult conversations, and again, educating our investor base as to what's happening in the market. So again, this is kind of boots on the ground view there.
Exactly, boots on the ground assessment. That's what that is, and there's still some of that still happening right now, and then seasonality involved in that as well. But yeah, that's certainly my speculation as well.
All the more reason to watch our market reports and stay up to date on the market. You can get ahead of it, right?
You're darn right. If you're investing and you're not in tune with these reports, then you're not doing yourself the justice that you should be doing. I mean, this is the research that you need, and we continue to expand these reports for that reason. We'll continue to provide more data. This is going to start turning into, instead of a 30-minute podcast market report, you're going to start seeing these, without a doubt, grow into an hour-long informative session on each one of these markets. And I mean, you've got to be in tune with that stuff. So.
No, but honestly, we're kind of joking a little bit, but it really does pay to stay in tune with the market, know what's going on, be knowledgeable about the market. I mean, if you're investing with us, we're going to communicate this to you so that you know that. But getting ahead of this, knowing that, oh my gosh, in June the average days in the market is 124 days. Gosh, I need to react, and I need to react quick, so that you're not down here, waiting till October or November to rent your place. You can get it, make the price adjustment accordingly quickly and get the vacancy filled.
Excellent point there. It was hard to hold back there for a second. You make an excellent point. If you're not tuned into this, your property manager better be, right? If you're hiring a property manager that's not in tune, you're going to, without a doubt, see higher vacancy rates than you're going to see market wide, without a doubt. They need to be in tune with this information. So if you don't think your property manager is already, feel free to send them a link to the podcast. All right, have them like and subscribe. We're happy to share that information with them. It's no problem to us. We will share with anyone who's interested in listening because we think it's important to drive the investor market here in the Indianapolis area.
Absolutely. Absolutely. All right, I've blathered on enough. Why don't we move on to our second market report, which is yours, Chris, Noblesville.
Let's do it. Let's jump in here. And we kind of glossed over these just before we jumped into our recording session here. And look, if you're watching any of these, you know I love the the Noblesville market. I like the entry point. I like the amazing school systems. I like the growth. I like the possibility of appreciation on your investment. I think you have a lot of opportunity to see your ROI increase from many different angles in this market. But let me just dive into the numbers here, and then we'll continue on with that conversation. Median rental price over time. What investor doesn't want to see their December rents go up at the end of the year? Seasonality apparently isn't a thing in Noblesville. I don't know, but you do see them creep up a little bit. It's a little hard to explain, but you do see that come down in our sneak peek in January, right? I mean, we're going to see that tick down a little bit. But if you're an investor, this is exactly what you're wanting to see. And not only are they ticking up, you're seeing an average days on market at 45, which, is higher than I would want. The previous market report for November of 2023 indicated 27 average days on the market. So we're up 66%, but 45, I'm still not crazy alarmed, right? I mean, there's seasonality that's going to play into that. It's higher than I want, so I'm going to get ahead of it because I have the market data. I'm going to get ahead of your average investor, and I'm going to bring my rents down a little bit quicker than those who aren't informed, and I'm going to reduce my average days on the market. But nonetheless, just with the data here, I'm not alarmed, and I'm liking what I'm seeing. We'll jump over here to active homes in the market, 113. So we're lower in active homes, which also helps me kind of explain, right? Lower supply. So we are going to see our rents tick up a little bit. So it's not a dramatic amount. So I don't know if it's directly related to that or not, but 113 active homes, where the prior month we had 131 active homes in the market. Now, average rents, we just tackled that in the previous graph. We are static from November 2023, but we're going to see this tick down a little bit. Not really a small amount, right? I mean, our sneak peek is indicating somewhere around 1840 is what we're going to see as average rents next month. But let's not talk about January. We're here to talk about December. Now, over to average sales prices, 327. Now, this is down considerably from what we were seeing in November's market report. Our average sales price was at 353, so we're down 25 grand, down 7%. That is, without a doubt, seasonality is going to play into that. Honestly, I don't know, Mike, what do you think there? I mean, I always want to relate to seasonality, right? That's going to be a direct market factor. And then in addition to that, you're going to see interest rates, which are a direct market factor. Do you think
that was
seasonality?
I was going to say interest rates. And I think, Noblesville has typically had a higher rate of investors than some of these other markets. And so maybe a little more price sensitive to those interest rates, interest rate increases. So that would be one thing that I would guess is definitely interest rates affecting investors looking at this and saying, well, maybe it doesn't make sense, but gosh, now that we've dipped down 7%, maybe it's a good time to buy.
That's a good point. That's an excellent point. Yeah, I didn't think about that, but you're right. I mean, interest rates are going to be a factor here. We'll see. I'm very curious as we're getting into the new year. What's 2024 going to bring? I can't wait to find out. Number of homes sold, we're at 61 homes sold, which is very consistent with what we've been seeing here month over month. Last month we were at 67, so down a little bit, without a doubt. If I'm going to smack a title on this, it's going to be seasonality affected. But and before we go into our other market reports, without a doubt, what we're going to continue to say on a lot of these markets, there's a tremendous amount of new construction going on. Noblesville is definitely one of those. If you're an interested investor, you're new to real estate investment, or maybe you're just new to this market, that's something you want to be in tune with, because I think Noblesville, you're going to see, and I'm going to say the same things as we get into the McCordsville market report. That's right, McCordsville. We're going to get to it, but you're going to see all those factoring into your ROI, appreciation, great school systems, a lot of growth, a lot of new construction. So keep that in mind when you're considering this market to invest in.
Yeah, let me one thing, if I'm an investor here, one thing I'm excited about is this, the median price over time is a little squiggly, but I'm excited about this, just the trend line. You know what I mean? If I just look at from January to December, I mean, that's just up and to the right. I mean, that is exactly what I want to see with my average rents. So that's super, super exciting. And then, of course, with that is this 8% from December of 2022 to December of 2023 is a 8% increase. I mean, gosh, if I get 8% every year, I'm thrilled. That's just in my rent. I'm also getting appreciation, depreciation. So, I mean, those are great numbers. I'm excited for Noblesville. Noblesville's a great market.
Yeah, Mike, and let me just touch on that just before we jump over to the next one, and then I'll shut up on this one. But you're right. These graphs are going to be skewed by these numbers here. They're going to look sometimes a little squigglier than you might have felt if you're in this market, and that's going to be why. So you're going to really want to be in tune to what those numbers are indicating here. And so what we are seeing, here we are in January of 2023, and here's where we are. A sneak peek into next month's market report. I mean, you're looking at what, a $70 increase? I mean, to me, that's probably a little bit higher than I would expect as an investor. But you definitely want to see it in a growing market, a market that you know is growing. That's much more in tune, right? So what I'm trying to get to, this is a stable market. That's what you want to see as an investor.
Sure. And still affordable at $325 roughly for an average sales price. Still super affordable.
Exactly. Absolutely. Yeah.
All right. You want to look at the next slide over time?
Yeah, let's jump into them.
Take a look.
Active homes over time. So we're just getting in tune with these new graphs that we're starting to report on. But so active homes that were on the rental market, I'm surprised to see December go down. Honestly, I would have thought it would have increased just seasonality. But again, I mean, if you're an investor in the market, you're happy to see that, right? I mean, supply is going to go down, demand should go up. You would hope. So you're seeing a lot of this trending up, and I like what Mike was doing there with the line, so I'm going to keep doing it. But you're seeing those active homes go up a lot, primarily due to new construction in this area, is what I would say, Mike.
Yeah, I agree. This is, I would say, honestly, relatively stable in terms of number of active homes on the market. I mean, we start the year at 99, we ended at 113. That's not much of a differential. So I think, again, just kind of going back to the stability theme, this is a stable market.
Yes, and I'm also going to go ahead and take that, as loud as I tout Noblesville being a great market, that's why we're seeing more activity in this market, right? So everyone's tuned into our channel.
Yeah, we need to see how many views we have. That's what it is. That's right. It correlates to our views.
You're probably exactly right. What a great point. Yes, you're right. We're going to have to start watching that data as well on our own personal
time. We'll have to report that on here.
I love it. I hope that's the case. Everyone's being driven to the Noblesville market, because at least I'm convinced it's a great market. And the homes that we currently manage tend to do pretty well in this area. So I'm going to go ahead and jump over to days on the market. Man, that looks like a squiggly line too. That is not that's a dangerous hill to sled down right there in the middle. It's not one you want to send your kids down at all. But average days on the market, April, look, without a doubt, and I'm using that term a lot because I'm so convinced that there were so many owners, and I had to directly interact with these owners who wanted to achieve these ridiculous rents, right? They're behind the data. They wanted to achieve ridiculous rents, and then we had to convince them slowly to bring them down. I think that's what you're seeing here, and I think Noblesville just caught on a little bit faster than some of these other markets that didn't start to come down until after your summer rates. But this is highly unusual, right? I mean, your days on and then your days on market start to come down. as rents begin to stabilize. People are listening to the property managers, they're bringing the rents down, your days on markets are beginning to trend with it, and they're beginning to stabilize here at the year end.
Yeah, I will say it is unusual, but I will say it is, if you kind of take the extremes out, like this 95-day extreme, this is actually a little more typical of a graph where you're going to see higher vacancy in the winter. And then, look at June, July, and August. You're 18 days on the market. And that's way more typical. And then it kind of trends back up towards the end of the year. So take out the extremes and you've got a fairly normal-ish graph here for what we typically would.
Yeah, exactly. And I can't wait until we have the data where we can show this year over year and see how those kind of match up. Because if this is what you're seeing in April, do not put your house on the market in February or March, because you're going to see a long time on the market. Just some in-tune information for you.
Exactly. All right, let's jump over to Fishers, also one of your favorite markets, right?
One of my favorite markets. I got to tell you though, it's falling. Not that this isn't an excellent market to be in, but this is a market because it's been so saturated, I think, over the last few years. It's beginning to fall in where I'm going to immediately put my money, because you're only going to, in my opinion, capitalize on one of those ROI objectives, which is your appreciation over time. I do think you're going to see some appreciation over time here in this market, but you're going to see we've been trending long enough with our average days on market being high to where I'm probably not rushing to this market. Okay. Now let's just kind of go through our bubbles here. Our median rental price over time looks like we're right in tune, and I can't wait to see if this graph is going to stay consistent right along with it. But it is interesting to see we are right in line with where we were the previous year. And also not what you want to see, right? Year over year, we were just talking about in Noblesville, what you want to see is a percentage increase. I want to be able to increase my rent year over year. And in fact, this would show that our average rent, I'm going to jump over to this middle box because it correlates with this. Yeah, I mean, we're down 1% from December of last year. We don't want our average rents to go down year over year. So I'm probably pausing on Fishers for just a short time, just to see what's going to happen and see if I can afford to invest in this area and continue to see a positive return. But
yeah, I would say unless you are more comfortable with a super safe, I would consider Fishers a super safe area to invest in. I mean, that is a solid community with great schools. Maybe you're not going to see the rent growth for, the next, 6 months or year, or maybe year and a half, I'm not sure. But what you are going to see is most likely appreciation. So if you want to have the appreciation and a super safe area to invest in, then I would say Fishers is definitely worth looking at.
Yeah, I agree with that. Yeah, I'm glad you mentioned that. That's exactly what I would mention. And I'm just going to quickly mention this. This isn't a short-term rental platform that we're using here with these market reports, but we have had some short-term rental success in that area. So maybe let's see if that could be a good market for short-term rentals before the Fishers community gains any traction on limiting your short-term rental possibilities. I know that those HOAs are starting to clamp down on those, but maybe that's a market we'll see here in the Fishers area. It's north enough to have some relation to Grand Park and the activities that are available on the north side. So maybe we'll see. We'll see how my attitude changes here over the months.
All right. Anything else on Fishers you want to add?
Yeah, I'm just gonna kind of gloss over these bubbles here. Active homes 112. That's very consistent with what we were seeing last month. 117 is what we were seeing. So not much of a change to speak of there. Average rents we've covered. Average days on market. Now this is the one bubble that I'm always super in tune to. Now we're 60 days, which is down 37% from the previous month of November, which was at 76 average days on the market. And we're up 60%. I got to tell you, it's hard to tell Fishers with this market report, as this is where you should be looking to put your money. But again, just like Mike was mentioning, this is, I think, just a safe market where you're going to really see your ROI reflecting your appreciation. So 60 days average on the market. Average sales price, again, if you're an investor in this market, you're seeing your average sales prices tick up. So you're at 353, where last month we were at 337. So up 4% month over month. Number of homes sold, 57. Previous month we were at 66. Nothing more to speak of there than probably your seasonality. I wouldn't even attribute much to the interest rate concerns or anything like that. That's seasonality, number of homes sold going down month over month.
Yeah. Well, let's look at the historicals here.
Let's do it. Active homes, pretty consistent, right? This isn't what we were seeing in the Noblesville market, which Fishers is not far from Noblesville, right? It's just south of Noblesville, but you're seeing that pretty consistent, which this is interesting to me right now. I'm just beginning to realize there's still new construction going on in Fishers, although not near as much, right? They're running out of space. Not near as much that you're going to see in some of these other sub-markets, but you're seeing those active homes trend down, which is interesting. So, what do you want to do with your money if you're seeing active homes go down? Which to me also speaks to the appreciation ROI standpoint. So I'm going to plant that flag. I'm going to go ahead and plant that flag in the ground and say this is your appreciation play in the Fishers market.
I think just going back to the fact that this is safe. I mean, there's nothing alarming here. There's no super highs, super lows. I mean, you start at 99, you end at 112, trending down a little bit. Again, this is just a safe, kind of a layup, easy play for you.
Yeah. And if you're not overly familiar with the Fishers market, it's a great expanding market. They have a lot of nightlife, a lot of day life. They have a lot of activities to bring people from all over the Indy market to it for what, lack of a better word, for tourism type activities. So, that's directly going to reflect in your appreciation play over time to continue to grow as a community.
Yeah, just a good solid community. They've invested a ton of money and effort into developing that new downtown. I mean, they're putting a ton of money into their parks, into their roads, and it's just a solid community.
Yeah, turning into a Carmel Junior, if you ask me.
Yeah.
So days on market, just kind of gloss over this. We've already beaten that to death, right? The previous month we were seeing 60. We are seeing that decrease in December, which is a little bit unusual. It doesn't speak to seasonality. So that is a good thing that you want to see month over month, without a doubt. But in the Fishers market, you can take one look at this graph and know that this is higher than what you want to see as an investor. This is averaging higher than what I want to see in the Fishers market, which is honestly, I gotta tell you, it's a little bit surprising. I mean, here we are, boots on the ground. It doesn't seem like that. And you know what? Maybe that's because we're a better property management company than others. I'm not saying it. Somebody did. It wasn't me. I don't know, because I think we lease properties much quicker than this. I really, really, truly do. In the Fishers area, I feel like those go so much faster than this. Maybe that's, again, because we're just keeping our investors in tune and we're making adjustments quicker than others. But nonetheless, this is for our investors to know this is higher days on market than you're wanting to see.
Yeah, and I think it's not just Fishers, it's everywhere, as we've seen already through these market reports. And I think I'm going to lean on exuberance from investors trying to kind of maximize their rents, maybe to their detriment, to pushing up those days on the market, because you push too hard and your vacancy is going to increase, and that costs. I mean, there's a cost to vacancy for sure.
Yeah,
so.
Absolutely. Yeah, I think that ties the bow on Fishers.
All right, let's do it. Let's move on to Westfield, one of my favorite markets. I own several homes in the Westfield market. And it's, I would say, maybe cooling a little bit. I would say in the last 2 years, it has been just absolutely on fire.
Yeah.
I think our channel has contributed to that. We need to also contribute or track views on this one as well, because inventory is going up on this one. But if we look at average rental price, we ended it here down a little bit. We're at 2,200 for the end of the year here at December, which is down 4%. But look, it's up almost 13% from last year. So I mean, it's a strong market. It really is. And if you look at from January to December, that trend line is up. It's a little flatter than we saw in Noblesville, but it's still trending in the right direction. I would say it's probably cooling a little bit, but definitely still trending in the right direction. And if you look here, our little sneak peek of January, we are starting up above January for last year. So still pretty good signals. If we look at active homes, 120, that's actually quite a lot. I'll show you on our next graph of how that figures out historically, but I think if I recall correctly, that's going to end the year at its highest point. So I'll talk about that there just a little bit in just a second. But average days on the market, a little high, not crazy for December. So 41 days on the market, which is actually down 30, almost 2% from last year, down 12% from from last year on that one. So nothing too alarming there on days on the market. But that's been, I think, a little bit of a wild ride here as well. Average sales price, we are at $380,517 on this one. That is up 2% over last year, and then just down slightly over last month. So again, still very, very affordable. I mean, I know it's for the area, it's a little bit high, but overall, that's still super affordable. I mean, 380 is super, super affordable. And kind of going back to the Fishers, this is also an area I think that you're going to see appreciation as well. There's so much, if you guys aren't familiar with Westfield, there's so much construction, so much development going on in this area. It's mind-blowing. My parents live up there, and I go up there every couple weeks, and every time I go up there, there's either something new completed, going up, a new community. I mean, it's absolutely insane. Westfield is insane.
Yeah, and they throw them up so fast these days. You find yourself on a street. Wait, am I in Westfield?
Exactly.
I know, they throw them up like crazy.
It's nuts. Number of homes sold, there was 64 of those homes sold, so there is still quite a few of affordable homes in the Westfield market. So I'm still bullish on Westfield. I still like it as a market. I think it's cooled a little bit, but cooling from an increase of 20%, 12%, 13%. It's still, I think, has really good fundamentals, lots of growth, lots of potential, lots of development out there.
Absolutely, yeah. And you use the word cool. This is a time where I'm not afraid of that word right now, right? I mean, the market has been just kind of crazy over the last, really over the last 12, 16 months. It's been kind of all over the place. So cooled in my terms tells me stabilized. It's stabilizing a little bit, so that we can develop a trend, so that we know if this is a good market to be placing our dollars in. And I'm just going to bullet point a couple items that I really like about this market report. I'm from the Indy area. I know what Westfield's about. Westfield is a stunning market. Again, it's on the north side of Indianapolis. It's not far from Carmel, so it does get a little bit of that runoff, I think. But there's a ton going on in Westfield. It's got Grand Park. It's close enough to the music center over there. I think a tremendous amount of potential in the Westfield market. I'm looking at this for sure if I'm even considering getting into real estate investment. I noticed average days on market, we're seeing that trend down in this market report, which is down 31%. That's awesome. That's awesome. 41 days on the market. I'm not afraid of 41 days. I mentioned this back in the Noblesville market. 45 days is what we were seeing in Noblesville. That doesn't scare me at all. I'm in tune with the information. I know how to make those quick adjustments to make sure that I'm under that average, right? I mean, these averages are made up of higher numbers and lower numbers. It's going to be made up of mine being on the lower number without a doubt. But last month we were seeing 60 days on market averaging out in Westfield. So we're down to 41. It's stabilizing. And then lastly, and then I'll shut up on this one, allow you to continue on with the next graphic, is right where you're circled at here. I mean, you're seeing an increase year over year. I mean, that's what we want to see. If I'm looking at this market, I want to know exactly what happened last January. And is this continuing to look better than it did last month? Well, this market certainly tends to be that way. I don't think you're going to see any slowdown in new construction or commercial industry being driven to this area without a doubt. I think you're going to see a play on most of those ROI points that you're looking for as a real estate investor.
Totally agree. One thing I did, actually, we talked about this, Chris, before, but I wanted to pull up last month's, just real quick to show the history. If we look at last month's report, this is Westfield. So this is last month, which is going to be inclusive of 2023, which is basically what we're looking at here in this dark line, but then also 2022. So we're basically looking at 2 full years of data here. And if you look at 2022, where we started, my goodness, the average rent in 2022 was like, what, $1,650, maybe $1,700?
Yeah. And
now we're at $2,200. So a $600 average rent increase over 24 months. I mean, that is unbelievable. So that's, I mean, if anybody wonders why I'm so hot on the Westfield market, that's why.
Exactly. I'm so glad you pointed that out. And I'm just going to mention this because you may be immediately looking at, because I know we went quickly there from the last year's graphic, is to be looking at these numbers, right? This graph looks like it's all over the place. Oh, is that accurate? Is that where a market I want to be in? Because it looks like it's all over the place. Well, look, if you change up these numbers a little bit, it's looking a little bit more consistent. But to Mike's point there, the number that you want to be aware of is, you're $600 more. I mean, what a great time to have been in this market. So,
Who doesn't want to own a home in Westfield right now, right?
Yes, yeah. Mike's over there smiling. I got several in the Westfield area. Yes, there we go. That's what a great market report. Tune in next month. Let's keep our fingers on the pulse of this market for sure. It's exciting.
Let's do it. Let me just do a couple more quick things on Westfield just to provide a little bit of perspective, specifically on this active homes. As I mentioned, this 120 is going to end the year at its high point. So, and that's, look, if we go back to January of last year, that we're double the inventory. Now, that in and of itself is a big deal. However, I'm not like super alarmist about it just because of the growth that we are seeing in Westfield. I mean, literally, I can think of like 10 to 15 new communities that are coming online right now in Westfield. So it's a shocking number to think, oh man, the inventory has doubled. But also shocking how much inventory is out there, how many people are moving to the Westfield market. So it's something to keep an eye on. I think this is maybe why we're cooling a little bit, because we are seeing the increase in the inventory, but it's not like throwing water on the fire or anything like that. It's just cooling a little bit. So it's something to watch, but nothing to be alarmed about.
Yeah, I would agree with everything you've said there for sure. I think, again, just going back, I think there's enough commercial industry going to the area that this market is going to be able to keep up. The demand is going to keep up with the supply in this market. I'm confident of it.
Lastly, we'll just touch on days on the market quickly because it's kind of the same story that we've been seeing, but a little bit of a wild ride. For some reason, we had this huge peak here in July, which is totally against all trends that we typically see. But the good news is that it's trending down with 41 days on the market, which is, not terrible, but it's not great, somewhere in the middle. So I won't too much more on days on the market because we've kind of done that quite a bit.
Yeah, exactly. I agree with you. What is interesting, and I'll just quickly mention it, and we don't want to speculate too much about it, is that we're seeing a peak at one of those spring, summer months consistently in these markets. Something we'll want to think about and try to see if we can come up with a strong theory.
All right, well, that will wrap up Westfield. Chris, I will let you take on this month. We included McCordsville, kind of an up-and-coming area.
Yeah, this is another area that I really love. I'm personally biased in this area. I'm personally invested in the McCordsville area, and I love what McCordsville is doing right now. In fact, if I were to say anything, I think you're getting in on the ground level in the McCordsville area. If you followed any of these market reports, I say it every time when I go over McCordsville. They are about 50% way through of building up their town center. Well, I say building it up, just having the ground foundation level, which is just some commercial industry and residential units in that area, which will continue to expand around it. So that's nearing its completion status, which I think is going to have a direct reflection. Mike mentioned earlier when we were kind of going over these markets that McCordsville kind of bleeds off of the Fishers market, and I really believe that that's true. Fishers has built up their town center. They did so few years ago now, and it's been largely successful. McCordsville would be silly being so closely related if they didn't mimic some of that, and that's exactly what they're trying to do, which is exciting if you can get it in. Now, imagine getting in the Fishers area before all that was completed. They saw a tremendous amount of appreciation around that time and quickly following. So that's exactly what I'm predicting here for the McCordsville area. So enough of my personal opinions. Let's jump into some of what the data may show. Who doesn't want to swing like this going into December? You can slide down and then you're going to come right back down, and then you're going to be stuck if you're sledding this hill for sure. But this is exactly what you want to see in December. Now, I also want to be clear and indicate that this is a very small market. Data points are going to be all over the place. Mike and I have discussed about merging another market, Fortville, into this market report, just to give it more relevant data, because we are going to see data points kind of all over the place, and it's hard to be accurate with such a small data set to track. So look forward to that in the new market reports going forward, merging Fortville, which is going to give us a lot more accurate data. And Fortville really is the McCordsville area. I mean, when you say Fortville, you're talking McCordsville. When you say McCordsville, you're talking Fortville. So that's what we're going to start doing going forward to give us a little bit more accurate data here. But again, back to what we currently have. We're looking at an average rent price right at $20.50, which is up 12% month over month, and up 12% year over year. We've already indicated that's exactly what we want to see year over year. We want to see an increase. If that's what it's indicating, it's a market I'm paying attention to. 12% active homes, or excuse me, 12 homes active in the market. Unfortunately, this is one that we don't track month over month, so I don't know exactly where we were last month, but currently have 12 currently active in the market. Average days on market, again, we don't have that data because it's not one that we're tracking. It's just such a small data set. We'll try to do better here as we go forward and expand this market, because it's without a doubt one that you need to be in tune with. Average sales prices. Now this, I definitely want to get some of your feedback, Mike. I mean, we're at 423. This is higher than what we are seeing in Westfield, which shocks me. This is higher than what we are seeing in Fishers. It shocks me. This is certainly higher than what we're seeing in Noblesville. This is surprising. And I'm going to beat you to it just a little bit, because I think what this is, and correct me if you feel otherwise, McCordsville, small market, tremendous amount of construction growth going on in McCordsville. Way more than what we've seen in some of these other markets, and they're still seeing a tremendous amount. So this is seeing much more than any of these other sub-markets that we've talked about. McCordsville is growing. Now, McCordsville has typically been known as a small town, your small ranch, small square footage type homes. That's not what's going up now. What's going up now are these bigger homes, bigger, much larger suburban type neighborhoods that are being constructed here now, quickly driving up the average sales price. It's still much higher than I would suspect, and probably not an area that your normal investor is going to look at and say, oh my gosh, that's how much money I want to put in right now for my investment property. But you need to be in tune. A lot of what you're going to see here, and I can't overstate this enough, is appreciation on your ROI, without a doubt. Mike, take it over.
Yeah, I mean, just to kind of echo what you said, I think McCordsville is a little bit of a undiscovered market in terms of investors, and I think that's why we're seeing that higher price point, because it does have more land than Fishers. So it is a little bit of a Fishers overflow community where people can go out and build a home, and build a nice home at, still, if this is an owner occupied, 423, that's still pretty affordable. And so I think that's what we're seeing. I think that's why we're seeing the higher price point there. There are more affordable homes available for an investor. Again, I just think, with only 12 homes on the market in terms of rentals, it's, the sales price is also not going to reflect that as well. So yeah, it's kind of up and coming. And to your point, I think this is an appreciation play as well. You're going to see this is going to be a growing community. I mean, Fishers is, I don't know if I would say built out, but almost all built out. And so it's, that's the natural thing, is that people are going to start heading over to McCordsville, and it's a nice community. It's got good schools. It's family oriented. And so this is the next Fishers, I think. Yeah,
and exactly. And if you can get in early enough, you still have that quaint small town feel while you have this bustling new industry and attractions going on around you. It's the perfect time to be moving to an area like that.
Hey, Chris, I was going to ask you, we talked about merging in Fortville. Do those both feed into the same school system, or are there two different school systems in McCordsville and Fortville?
There are currently two different ones. Now, there is, and I'll have to do some research on this to make sure I'm completely accurate, but McCordsville does have its own separate school system, but except for the middle school, they bleed into each other for the middle school.
Okay.
Yeah.
And is one, as an investor, that's one of the things I'm always looking at is good school systems, because that typically protects my home value. Is one or the other thought to be a better school system, or are they both considered pretty good?
So I haven't followed the Fortville, so I'm only going to talk about, the satisfaction I have from my inner circle. they seem to love the Fortville school systems. I have no idea what the rating systems are there or anything like that. I believe, but this is just speculation, right? And I prefer to speak on facts. Speculation, I believe that they're almost equal. But yeah, everyone though talks very highly of the McCordsville school districts, but I think that they're closely related.
Well, maybe when we do the next Fortville update, maybe we'll pull some stats and talk about the school system as well.
Love it. Great idea. Love it. Yeah.
Cool. All right. Well, I think that's a wrap for this month. Yeah.
That does it, I think. So, if you've stayed in tune this long, all the way to make it to the end of this market report,
congratulations.
Yeah, congratulations. Well done. I got to tell you. Man, if you did, you without a doubt see the value here in the importance of, again, not only being you in tune to what's going on, which you absolutely should be, but your property manager has to be in tune to this data, right? I mean, this is what they do for a living. They have to know this surface level data, because that's what this is. This is, in my opinion, this is surface level data that you have to know if you're going to perform at any valuable rate. So this is data you have to have. Be sure, like, subscribe. You've got to get notified every time one of these goes out. And not to mention these other videos that we do every single month that are going to keep you in tune on things that you should be doing if you currently own an investment property, or where you also need to be looking if you're new to the real estate investment market here in the Indianapolis area. And also why we agree with Zillow, number 4. This is where you should be looking. Be sure to like and subscribe without a doubt.
Exactly. Awesome. All right. Well, let's make that a wrap.
That'll do it. Thanks, guys. We'll see you next month.
Thanks, guys.